Alright everyone, Cowboy Trades here, welcome back to the channel for another on-chain metrics update on Bitcoin. In this episode we're going to be whale watching, as always, discussing what the retail wallets are doing, discussing what the whales are doing, and then talking about how this will affect the price action. There's a couple of videos that I do want to get out over the next 2 days, over the weekend, especially before this weekly candle body close over on Bitcoin, so expect a few more updates to come out over on Saturday or Sunday. I am busy over on Sunday, but I'm going to record a TA update and potentially schedule it for Sunday, so you do have some content for me while I am away on Sunday. So first of all, like I said, let's discuss what is going on with the whale watching segment. Now, let's start off with the retail wallet. So basically addresses with more than one Bitcoin. Do bear in mind, the current addresses with more than one Bitcoin are about 979,000. However, of course, there are going to be some whales within this mix. But when we do come over to the whale wallets, there's only about 2,000 of these whale wallets. So with that said, when we are looking at this chart, we're really looking at what 99.99% of retail is doing. Now, as previously discussed on this channel, retail poorly navigates these markets. They always DCA at the worst time, and they always sell at the worst time. So if we zoom into, this current cycle from the bull run in 2022, you can see when price went to the upside, round about 11,000, 12,000 or so, it broke down to about 10,000. And what did retail do at this moment in time? Did they take this time to accumulate? No, they sold when Bitcoin bounced back to, around about 10,700. They were selling at 10,000. And then you can see they weren't buying, and then all of a sudden you can see this bottom here where we slowly grinded up and started to spike. The price action was at 40,000 when these retail wallets started to accumulate, and of course they basically accumulated more or less at the top. And since 40,000, they've been buying, and they're celebrating the move up to 23,000, even though they were buying at, 40,000 or so. So obviously they're heavily under the water, but as we always know in these markets, there's two sides to every coin. If they were buying at 40,000, who were they buying from? Well, this is when we come over to the smart money, the addresses with more than 1,000 Bitcoin. If we zoom in, we've talked about this before on the channel, but we know that this most recent bull run was purely institution-led. So, if we look at this, since $7,000, you had many institutions pile in, as you can see with this orange line here, marking the addresses with more than 1,000 Bitcoin. And when did they start to offload their bags? 46,500. When did retail start to buy? Around about 40,000. So we really know retail was buying from the smart money. Smart money made a ton of money in this move to the upside, and retail basically started buying at 40,000 when smart money was like, hey, Bitcoin's going to 100,000, 1 million, our analysis predict 250,000. That was of course all bullshit, because they were selling up at these prices up here. So when we do look at how retail's been navigating these markets, they sold more or less at the top. And since then, we broke down to about 2,116 wallets, around about 40,000. And since then, there hasn't been too much movement in terms of the smart money. So smart money, smart money's and institutional money, whales, these people are currently sitting on the sideline. But when we do zoom in to the most recent price action, of course, Bitcoin's been rallying for the past 4 weeks up to 23,000. And with this, when we do zoom in to, how the institutions are doing, how the smart money's doing, you can see how they're navigating this market. There were previous lows, addresses at 2,040, but as you can see, in the past day, the addresses have actually broke down into new lows at 2,038 addresses with more than 1,000 Bitcoin, indicative that once again, some of these whales, some of these institutions, and some of these smart monies are exiting the market as the Bitcoin price goes to the upside. That is a telltale sign. That is a warning sign. You've got retail buying up the coins from institutions, and you've got institutions, smart monies, and whales currently selling. So when we do wrap up this video and head over to the Bitcoin ratio of retail to institutional addresses, basically, once again, when we zoom into this cycle, this is another metric to help us identify. If you want to read more about how this is calculated, you can read it here. But basically, when the blue line goes to the downside, it's indicative that more institutional money is coming into the market in comparison to retail, because you can see how this is calculated. It's simply the number of Bitcoin retail wallets divided by the number of Bitcoin institutional wallets. And with this, once again, when institutional wallets increase, this blue line or this ratio will go to the downside. And you can see in 2022, when the blue line did go to the downside, once again, indicative institutional money, smart money, whales are flowing in the market, the price absolutely shot up to the upside. And once again, we see this number again, 46,000. At 46,000, the ratio started to spike back up to the upside. What does 46,000 correlate to? It correlates to when the smart money was selling out of the market. And since then, if we once again reset the zoom, you can see this blue line, this blue ratio has been climbing as the price has been breaking down to the downside. So when we do zoom in, you can see at this moment in time, we haven't quite hit new highs, but we're very, very close to pushing up and making new highs on the Bitcoin ratio of retail to institutional addresses. And once again, this is indicative that smart monies, whales, and institutions are on the sideline, and it is predominantly retail who are piling into this market right now. So that is a warning sign. Of course, this isn't the only update I'll get out for you today. I'm also going to talk about some other on-chain metrics, and potentially I think it makes more sense for me to schedule the TA update to come out over on Sunday, because I won't be here on Sunday, but I do want to give you content before the weekly candle body close for Bitcoin. So for today, my friends, or at least for this episode, that's all I've got. Expect another update or two coming out a little bit later on today, but for this episode, it's all I've got. So once again, retail is buying, and the institutional money, smart money, whales, they are sitting on the sidelines, and in the lower time frames, they're breaking down into new lows, indicative that they are selling into this most recent rally. So for today, my friends, that is all I've got for you. Expect a few more updates coming out today. If you want some more content from me, on-chain metrics, updates, memes, while I am away from the market, be sure to follow me over on Twitter at 618_cowboy. If you enjoy the content, let me know down below by leaving a like and a comment. Also, be sure to come over and join the Discord. If you click on the About section, you can see all of my official links are down below. Twitter, Discord, Instagram, and official merch store. But for today, that's all I've got. It's been your boy Cowboy Trades. I'm out. Peace.